everyone, John Henry here, slingshotfutures.com. Welcome to the daily futures market outlook for tomorrow's trading. Tomorrow being the 21st of the month. Overall, okay day back in the markets. A little bit slower, things kind of taking their time, and it's really something that you anticipate quite often when you're coming off of a holiday weekend. Monday was President's Day, and well, you anticipate Tuesday being a little bit slow, and definitely delivered on that one. But as long as you were patient, there were still plenty of opportunities today. Now, before we jump on in, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you'll be able to sign up for our email newsletter list, so you'll be notified every time one of these videos comes out. Along with that, in the email itself, we go over a bunch of things that we just don't have time to talk about in this video, and that's going to be different things of interest, like stocks, cryptos, anything of interest that's setting up right now will show up in that newsletter, so make sure to sign up for that so you don't miss anything ever again. Of course, if you haven't done so already, click on the live trade room subscription and trial info, where you can sign up for a free 3-day trial in the live trade room. You can hang out with us for a couple days and see what we're all about. It's a good way to kind of dip your toe in a little bit, get your feet wet, and see what's going on and how we approach the markets every day, and kind of get an inside look, as well as being able to ask questions and all that fun stuff. So make sure to sign up for that if you haven't done that already. Now, first off, the euro is pulling back pretty aggressively off the highs. We were looking for this buy bounce. We finally had it. We had good follow through by the pullback, slams higher. We come back into the highs though, and a complete and total failure. Couldn't make it through the top. Couldn't make it through anything. I mean, even the previous swing high, that's just a twin reversal off the highs. Just a dumpster of price action. It looks like every buyer on the planet sold out of their contracts at the highs because it just didn't stick around. We hit the top and then immediately sank right back down to the lows again. That opens up a couple areas of interest. First of all, we have rising wedge support coming into play. That is not too far away now. We also have the horizontal level of support or resistance. It's been kind of chopping through the market for quite a while, and that's sitting at around 23,695. And then we do also have one other key level, which is going to be the base of this big bull bar. Very frequently when you have a huge bar, whether it's a bull bar, bear bar, doesn't matter, when the market comes back and returns to those areas, it's sort of a do or die situation. In this case, we have a very strong bull bar, and the anticipation then is that the buyers who bought this, who initiated this big spike to the upside, they're going to want to defend their positions. If they're still long, well, guess who's going to be buying again when it comes back down to those lows? The buyers who bought in earlier and they've been holding through this whole thing up. Maybe they didn't exit everything at the highs and it dumps all the way back down to their entry point. They're going to be defending their original entry position, mainly just due to the fact of, well, I mean, obviously they were there in the first place. Let's see if they have enough to defend it on a second time around. In this case, so far, they haven't disappointed. We have a good 8 hours or so of bullishness off of that bounce, and the buyers do seem to be attempting to hold it higher. So that area is an area of interest, but the one thing that kind of stands out is the combination of all of these together. We have the previous low, that major bull candle's low, we have horizontal support and resistance, and we have rising wedge support. And unfortunately, they don't really hit until a little bit later. It's going to take another 16 to 24 hours or so before we actually start reaching into those areas of interest. And that generally means that we're probably going to go a little bit sideways or chop and slop for a little while until we get up into that area. So just kind of looking for it to chop back and forth and then ping off of those areas. Still definitely looking for the buy side, or at least in a buy attempt. But I am a little bit nervous given the amount of bearishness coming off of the highs. If the buyers are really that interested, why did they fail so aggressively off the top? There's no sentiment at all. Once it reached those highs, they were gone. The buyers disappeared. So that may be a big clue to keep our eyes out in that, yeah, we may find some nice bouncing on the way, but this could be destined for a bigger drop lower. We may finally be looking for that overall low that we've been looking for, man, for over a month now. A dip back down to around 22, 180, 170s in that area. That might be next up. So we got to be a little bit cautious on the buy side here for the euro, just given that fact of, well, the buyers completely disappeared. They're probably going to be looking to reload, and they're going to want to reload at a better price. Over on gold, we have another area of interest, a key level. We have the rising level of support now coming into play, very shallow, and a falling area of resistance, again, very shallow. Looks more like we're just starting the beginning of a long-term range here. But a couple areas to note. We have a rising wedge bottom coming into play off of those two lows. We have that earlier channel high. In this case, we broke out of it. We're coming back now. It's a breakout pullback, and we also have that horizontal support and resistance all coming in to right around the the same spot. So this area that we're sitting in, I mean, arguably from around 29.4 down to 1330. I mean, this whole area is going to be a big area of interest, and it's very likely that buyers are going to be buying into this, trying to accumulate for another rally up. Now, this is another one of those situations where if the buyers were so aggressive down here and, you know, we were tracking them the whole way up, what happened, right? We had a huge bull breakout. Looked like they were going to have a nice little kind of spike and channel break and continuation up. They tried getting that continuation right there, and then it fell apart. So it's, you know, we have a lower high. We have buyers that are failing. They're not showing up to the party. That could just mean that buyers are looking for a better price. Maybe they just want to buy at a culmination point like we have here. That would make sense. If you were a buyer and you saw this really weak follow-through, bad follow-through, and a big correction, it makes sense to look for the next major area of support, and that's where we're sitting right now. But that also kind of tells me, if we do rise higher, I need to be a little bit more cautious. We might not go flying all the way back up to the highs like we did back here. We might be in a situation that we have to kind of keep our eyes on, and that, well, we might just get stuck. And the next level of support or resistance is coming right around this earlier range area. We've got the previous range highs. We have the lows, the highs, the lows, the highs. We have that breakout bar, and that even failed. That's going to be the next area of interest. So bouncing off of here, looking for an objective on price to around 1345 to see if the market can shove its way back up towards a retest of that. Again, it's another market that we're going to have to play it a little bit safe. I do like the buy side for the short term, but we might only really just get a couple bounces here or there and then just go collapsing all the way back down. We did miss that major test down here by just a little bit, and this might just be kind of revenge for the sellers trying to come back down and slam the market down to get that 1305 before going back up to a solid new high. So again, we have to play it a little bit safe here on gold. On crude oil, we're seeing the sellers holding the 50% to the downside. We haven't quite made it up to that 62.85 area of support or resistance. They missed it by just a little bit. The high of that candle was at 62.74. We're looking for 85, so they came 11 ticks away before turning back down again. In the realm of technical analysis, that's not perfect, but sometimes it's good enough, you know. That might just be close enough where sellers might just say, you know, it didn't hit it, you know, it didn't physically hit that level, but at the same time, it's only 9 ticks on a 4-hour chart. Does it really make that much of a difference? Well, we'll have to wait and see. It does look like the buyers tried getting a snap back up to test it, but that ultimately failed back down. And it looks like now we're dealing with a short-term ascending wedge that is breaking lower. So it's not over for the buyers. The buyers do have another potential shot at making those highs, and I would still love to see a retest of 62.85 just to kind of finish the move and trap above those tops. But we are starting to put in a little bit of a ceiling here, and the buyer's going to have a harder and harder time the longer they wait to get that move going. We're cycling off the 50%. We're close enough retesting 62.85, that major area of support or resistance swing low. Everything is starting to stack up again, and now we're seeing the moving averages cluster together as well. They're pretty much all on top of one another. It's going to get harder and harder, and the longer this takes, the more chop we're going to anticipate. Going in the overnight session, I would still like to see a little bit more bearishness to drive the market down, get an ascending wedge, fake break low, and then maybe a retest of the highs. And then from there, looking to dump it back down again. But, well, you know, all things considered, if we zoom out far enough, we can see that we came back to a major area of support. Right, we came back to that major swing high after the breakout point. It's a retest of a breakout, and we're now on our way back up. So in the bigger picture, this looks pretty good for the buyers. So in all honesty, if the sellers do try to take it lower, I have to assume that we're just going to see a lot of buyers below all of these swings. They're going to be trying to accumulate the lows. Swing low, retest of support, the base, all of them. So even if it does go sliding all the way lower, we're likely going to see buyers building into the move with the assumption that over the next couple months or so, we might find ourselves right back at those highs again. So, you know, the overnight session, I would like to see a little bit more bearishness into bullishness back up to 62.85 and then look to sell it again, but we can't lose sight of that bigger picture, and that bigger picture is definitely bullish. And then over on the S&P cycling off the 61.8, holding really, really well at 27.45 half, cycling nicely. We had that earlier level of support or resistance. We broke above it, held it as support. Beautiful trades off of that area on a 5-minute chart as well, before trying to go back up, failing, and now we're back underneath it. Now you'll notice we are still chopping around it a little bit, but this most recent 4-hour bar is trying to get a little bit of kind of throughput, right? Trying to slam through that level of support or resistance to get underneath it. If we can get enough conviction, then we're looking to use that area once again as resistance and sell the market back down to the new lows. Overall, I would still really like to see the index markets push down for slightly more aggressive dip lower. You know, a 12% dip on the SPY. Hard to be too upset with that. Long-term bullish, we've been in an uptrend forever, it seems, for the last couple of years. Seeing a 12% dip, I would wager a guess that there's a lot of buyers that bought into that dip and they're holding for a new high. That said, this could be, on a daily like we were looking at last week, this could just be a single leg down and we're looking to make one more leg to the downside, and that next leg to the downside could be pretty painful. We could be looking for another 10 to 12% down. You know, a 25% dip in the index markets after seeing it rally higher for so long. It's going to be a lot of happy buyers as long as they're building in, but there's going to be a lot of people that are going to have to sit through some pain, and that might tends to lead into at least a little bit of fear selling, right? They've been in the green the whole way up for the last 2 years, and all of a sudden, in the course of a month or two, all of a sudden now they're red and they're down. Then they start panic selling, and the market slides off a little bit further. And that's usually how those types of, not necessarily crashes, but corrections tend to go. You know, the correction goes a little bit deeper than what a lot of people want to see, and then it goes a little bit further because everybody starts panic selling. So you get kind of a two push on there, right? You get that fear drop lower, a little bit of breath of fresh air, and then the fear sets in, and that's when all of the sharks who are buying it up like crazy are having a heyday, but a lot of retail traders that may not know any better are going to be selling out, causing this dip lower for those sale prices for someone like you and I. Something to keep in mind. We are failing off of the previous highs, and that is the area that I want to look for in terms of support or resistance. They held it as support. Now we're breaking down. Look for it as resistance to continue the drive lower in the overnight session. So that's going to do it for the outlook. Tomorrow's trading, we have a decent amount of stuff going on. You know, today we didn't have any news at all. Tomorrow we at least have something. Tomorrow out of the European side of things, out of Germany specifically, at 3:30 Eastern time in the morning, we have the German manufacturing PMI. At 4:30 out of the UK, we have the average earnings indexes plus the bonuses for December. That's forecasted at 2.5%. Also out of the UK at 4:30, we have the climate count change for January, forecasted at 4.1 thousand. Now, going in a little bit later, kind of interesting to see this, but at 9:15 out of the UK, it's not something you get very often, but we do have the Bank of England Governor Carney speaking at 9:15, as well as the inflation report hearings. Those are some big announcements for the pound, so if you are trading anything based in the UK, you might want to play it a little bit safe going into 9:15 tomorrow. It might be a little bit of a wild ride. At 10 o'clock for the U.S., we have the existing home sales for January forecasted at 5.6 million. And then at 2 in the afternoon, 1400 Eastern, that is the FOMC meeting minutes, and those usually get a little bit choppy sloppy too. So not only are we coming off the backs of a long holiday weekend, but we also have some pretty big news hitting tomorrow that could cause a little bit of a more of an early in, early out scenario. People coming in, getting the trades, and then taking off because they don't want to deal with all the volatility. One way or another, though, like we always say, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.